For decades, the idea of a dual-income household was supposed to make housing easier to afford. 2 salaries, 2 paychecks, more financial stability. But for many American professionals today, even households with 2 incomes are finding that housing costs still feel increasingly tight. Mortgage payments, property taxes, insurance, and maintenance are quietly absorbing a larger share of household income, even when both partners are working full-time. For a long time, the dual-income household represented financial stability. 2 working adults meant more purchasing power, more flexibility in monthly budgeting, and greater resilience when costs increased. But in many parts of the United States, housing expenses have evolved in a way that is quietly reshaping that equation. Today, many dual-income households are discovering that 2 salaries no longer create the financial breathing room they once did, particularly when it comes to housing. The issue isn't always dramatic. Mortgage payments are one part of the equation. Over the past several years, mortgage rates and home prices have moved significantly. Even households that purchased homes during lower rate periods often experience increases, and related property taxes often adjust based on home value assessments. As property values rise, those tax bills tend to increase as well. At the same time, homeowners insurance has become a growing part of housing expenses. Insurance premiums have steadily increased due to rising repair costs, weather-related risk, and broader insurance market adjustments. For a dual-income household, these increases may seem manageable at first. After all, there are 2 paychecks supporting the household budget. But the structure of modern household finances means that housing costs often expand alongside income growth. When 2 incomes become the baseline requirement for maintaining a mortgage, housing expenses become anchored to maximum earning capacity. In other words, the system begins to assume both incomes will always be present. That assumption can quietly change the financial dynamics of home ownership. For example, when one partner experiences a career pause for caregiving or job transition, the household may feel the full weight. Housing costs typically behave as fixed expenses. Mortgage payments remain constant month to month. Because of this structure, housing expenses rarely adjust downward when income growth slows. Another factor shaping the dual-income housing dynamic is location. Many professionals live near employment centers where demand is strong. This means even households earning 2 professional salaries may find themselves dedicating a large portion of income toward housing alone. In previous decades, a single income could often support housing. Today, dual incomes are no longer an advantage. They are a requirement. Home prices and financing costs have gradually aligned with the assumption that many households now have 2 earners. 2 incomes once expanded financial freedom. But in many housing markets today, they simply maintain financial balance.